Good afternoon, everyone, and welcome to TBR's webinar, Winning Strategies for Growth in the Enterprise Security Market, Insights from TBR's Enterprise Security Benchmark. And I'd like to give you all a special welcome since this is the first webinar of 2015, so we're excited to kick off the year with you guys, particularly in our new security practice. My name is Allison Crawford, and I'm hosting today's webinar. Security vendors are adjusting their portfolios and investments to respond to customers' changing expectations and tap into new opportunities as organizations turn to new technologies and platforms to protect their assets from security threats. Successful enterprise security vendors effectively align their financial, go-to-market, and resource management strategies to address growing product segments and services platforms, gaining a competitive edge and growing revenue and margin throughout 2014, while other vendors made strategic decisions that slowed their growth or limited their presence in important segments or geographic regions. Before I pass this over to Jane for the presentation, there are a few housekeeping items I'd like to cover with you. First, we're recording today's session and we'll be posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Jane will address them at the end of the presentation. Or if you'd like to have a client inquiry for more detailed private discussion, please reach out directly either to Jane or myself at the end of the webinar to set up that conversation. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And I'll share all the social media links with you again at the end of the presentation. Now let me introduce Jane Wright. Jane is our lead analyst for enterprise security here at TBR. As a senior analyst in TBR's computing practice, Jane Wright is a team lead for data center and information security research. Jane is also a lead on TBR syndicated reports, which highlight market trends and competitive positioning, and she manages custom engagements that result in actionable insights for TBR's clients. Prior to joining TBR, Jane was a senior analyst covering information security at Enterprise Strategy Group. She was a research director for Gartner, Inc. for more than a decade, and she began her career with positions at IBM in digital equipment. Jane holds a BS from Boston College and an MBA with a concentration in technology management. And with that, let me hand this over to Jane.
Thank you. Hello, everybody, and thank you for joining our webinar today. Our webinar is based on TBR's first ever benchmark for the security market. You probably know about our benchmarks, where TBR analyzes the financial and strategic performance of key vendors in different segments of the IT market. Well, we now cover the security market, and we just published our first benchmark covering 15 key vendors in the security market. We call this our enterprise security benchmark because we are including all non-consumer security solutions. So when I refer to enterprise security, just keep in mind that I actually mean security solutions for small, medium, or large businesses. And with that, I'd like to present to you some of our findings. In our webinar today, I'll give you some overviews of the key trends that we discovered in our benchmark, and I'll show you a snapshot of how the vendors that we covered performed in our benchmark. And then most importantly, I'll take you through 4 strategies that we found drove some vendors to success in the enterprise security market. So let's take a look at that first overview slide. When TBR set out to evaluate the enterprise security market, we of course looked at the different segments as you would expect: network security, endpoint security, IAM, SIMs, GRC, things like that. And we certainly did that. We've covered that in our benchmark. But more importantly, we wanted to slice the market in a couple of different ways that you probably haven't seen before. First, we decided to slice the market between solutions designed for prevention and solutions designed for detection and response. And so in the prevention slice, we place solutions such as your traditional IPSs, antivirus, SIMs, basic SIMs, basically solutions that are designed to be corporations' first line of defense, mostly blocking commodity malware, usually signature-based malware. Then, for the detection response bucket, we looked at more advanced technologies, such as solutions designed to detect infections that have bypassed that primary line of defense and now need to detect what has already entered the infrastructure, prioritize it, and deal with it. And so here we looked at solutions that integrated intelligence from external sources, applied forensics, looked at behavior analysis, and things of that nature. So those are the two slices that we're showing to you on the solution type line. What we did is we mapped each vendor's revenue to the different slices of the market, and then we confirmed that by looking at some primary research that TBR conducted in the fourth quarter of 2014. We did some primary research in enterprise security spending. And with that mapping and that primary research to refine it, we showed that vendors earned 61% of their revenue from prevention-oriented solutions and 39% of their revenue from detection and response. And that may surprise you, and I'll tell you a little bit more about that in just a moment. But while we're here, let's take a look at the other slice of the market. This one is a little bit more of traditional slicing, but we, of course, also divided vendors' revenue between solutions that they sold that customers deployed themselves and managed themselves, typically on-premise, and solutions that customers opted to use as a service, a managed or hosted security service, either provided directly by the vendor or through one of the vendor's service provider partners. I want to note that in this delivery platform slice of the market, we did not include professional services. So we have customer-managed solutions or security-as-a-service solutions. And as you see here, what we discovered, also refined with our primary research, is that vendors earn 64% of their revenue from customer-managed solutions and 36% from security-as-a-service. So here's the thing. Based on our primary customer enterprise spending study, what we found is if I had shown you this slide 1 year ago today, it wouldn't be very different. And that may be surprising because with all the attention that we're hearing around especially the detection and response slice of the market, the attention that the media is paying, customer discussions, vendor investment, you would think that that was growing more rapidly. And also, based on what we've seen in the past, we used to see security as a service growing much more rapidly, and yet now, from 2013 to 14 to 15, it is not growing as rapidly. So as we go through this webinar, I'll tell you some of the reasons why and give you a little bit more detail on that. But I know you want to see the 15 vendors that we covered and how they're doing, so let's take a look at that. Here is one slide from our benchmark, just one of the basic metrics that we cover, and this is a revenue slide. It shows 2Q14 revenue for the 15 vendors that we covered. Along the horizontal axis, you see how they did for revenue volume, with IBM achieving the greatest volume of revenue in enterprise security. And on the vertical axis, we show growth, and no surprise there, FireEye has terrific growth going on. But here's something to look at. Take a look at that cluster of vendors that you see grouped together there. In this quarter, more than half the vendors that we covered earned between $100 and $200 million in revenue in the quarter. And more than half the vendors we covered grew at less than 10% year to year. And they've been there, they've been stuck there for many, many quarters. So what we've got going on here is we've got a bunch of vendors who are all trying to break out of this holding pattern that's got them all clustered together. And so they're trying different strategies. Some of those strategies around portfolios or partnerships or geographies, and some have helped and moved the needle for some of these vendors up or out, and some have not. And so in the rest of this webinar, I'll talk to you about those strategies that have helped some vendors move up and out in our chart. Let's take a look at those 4 strategies I promised you. The first strategy is around portfolio selection. You remember I told you that the detection and response segment or slice of the market is not growing as rapidly as we might have expected. What I'm showing you here on the left-hand side is how each vendor's revenue broke out in our benchmark between the detection and response slice of the market and the prevention-oriented slice of the market. So this is their products and services revenue combined. The way you'd read this is, for example, IBM earned 55% of their revenue from prevention-oriented solutions and 45% from detection and response-oriented products and services in the quarter. And as you look at this, you see, yes, most vendors did accomplish about a 50-50 split between prevention and detection and response. And that's a good thing. That's a very good thing. Because take a look at on the right-hand side of this chart. What you're seeing on the right-hand side here is a quick preview of our upcoming report on that primary customer research that I told you about. What we're showing here is what we asked customers about their security spending in 2013 and 14 and their planned spending in 2015. What you can see here is that customers told us in 2014, they spent 31% of their budget on prevention-oriented solutions and also 31% on detection response. So if you look at threat management overall, they were basically a 50-50 split as they were spending their budget in 2014. Now, as you look to 2015 plans, you see a little bit of growth coming for prevention-oriented solutions, and a tiny bit of growth, even less growth, coming from detection and response. Now, I will note that, of course, as you might not be surprised to know, most customers are expecting overall budget growth. So this is just the change in percentages of their overall budget. This might be a bit surprising. You might have expected greater growth in detection and response because of all the focus between customers and vendors on this part of the market. But what our study shows is that the growth isn't really poised to happen in 2015. What are the reasons for that? Well, customers told us that they're planning to maintain their investments in prevention-oriented solutions because they need them to maintain compliance. They need the prevention-oriented solutions to qualify for cyber insurance. But also, some customers told us that they're waiting for their incumbent vendor to come out with more detection and response technologies and solutions. That is, a couple years ago, if customers were looking for a detection and response solution, they had no choice but to go to a startup. But now, over the past couple of years, we do see the more mature and established vendors unveiling their detection and response solutions, most significantly IBM ATP. And so customers are primed now to wait and to more closely evaluate the larger, more mature vendors and perhaps their incumbent prevention vendor. So that's what we see happening in this split between prevention and detection response. We see that IBM and Symantec and RSA have done a good job of balancing their portfolio between these two slices of the market. And considering the spending plans that we see customers reporting for 2015, that's a very wise move. The next strategy that I want to present to you is around partnerships. Now here I'm talking about technology alliances, not channel reseller partnerships. For the past couple of years, you know, we saw a lot of big acquisitions in the security market, especially IBM with Trusteer, but also things like Bit9 and Carbon Black, Dell and SonicWall, things like that. But I believe that 2015, we will not see so many large acquisitions in the security market. And the reason for this was indicated by Symantec's announcement that it's going to separate its business and separate out its information security business and its information management business. What Symantec was demonstrating is what a lot of vendors are experiencing, and that is it's very difficult to wrest synergies in one company between a security business and other IT lines of business. Security just faces so many different challenges. The drivers are based more on fear and a feeling of warfare, and the decision makers in the buying process are often quite different than other IT solution areas. And so vendors are challenged to really leverage an IT security business inside a larger business. For that reason, I think that we'll see fewer alliances in 2015, and instead, it's going to be all about partnerships. Partnerships in the security industry are going to be gold. They're going to be worth gold in 2015. And so the reason I'm showing you this chart here has to do with those alliances. This chart comes from our benchmark, and in this particular case, we're looking at the metric of enterprise security revenue dollar earned for every enterprise security employee in the organization. And you see that Cisco and Check Point did really well in this regard. And Cisco and Check Point also are two companies that have done very well in leveraging very strong technology alliances to help them drive revenue without putting such a burden on their own internal resources. Vendors that are able to form these tight alliances in 2015 will do very well, especially those that take a federated approach, federated by product families. That'll enable these member vendors to share resources, marketing and sales resources, and yet maintain their own specializations and focus on their particular product niches. The next strategy I would like to talk to you about is around a platform strategy. Remember I talked to you about customer-managed solutions and security-as-a-service solutions. And what I'm showing you here is just the prevention slice of the market divided between the customer-managed and the security-as-a-service delivery platforms. I could just as well have shown you the detection and response slice, but here's just this example. What we're looking at here is how each vendor earned its security revenue from the customer-managed prevention solutions and from its prevention solutions delivered as a managed or hosted service. Recall that I told you that the breakout between customer-managed and security-as-a-service overall was 64% and 36%. So what you're looking at here, do note that these two charts are not to scale. But overall, what you can see here is that some vendors have done very well driving their revenue from both platforms. Symantec in particular has done a great job of driving their revenue from customer-managed versions of their solutions and also offering their solutions and customers using their solutions as a service. But overall, security-as-a-service engagements are not growing as rapidly as they did in the past. Especially around 2011, we saw a great deal of growth in security-as-a-service, and that primarily was driven by the security skills shortage that we saw at that time. Customers were signing up for security-as-a-service to augment their staff because they were having such a hard time finding and keeping skilled security professionals. Now, that skills gap is still going on, but it's leveled off. It's not growing as severely as it had before. And so for that reason, that's just one reason why we see security-as-a-service revenue beginning to level off. But at the same time, I need to tell you about something else I'm hearing from customers. I'm hearing a renewed sense of wariness or concern about sharing security log data with service providers and about providing a backdoor for remote access to service providers. This is a new level of concern that I'm particularly hearing in 2014 going into 2015. And this is going to challenge growth of security as a solutions revenue. Now, I hear a lot of vendors talking about the assurances that they're providing to their customers to help customers feel more confident in sharing data and access with security service providers. But I don't think that these guarantees of anonymity and aggregated data are really going to break through that wall of concern. Instead, I think that we're going to need to see a vendor or a security service provider come up with a very innovative approach, a different configuration or some other scenario that will help customers feel very confident in sharing their information as needed with a security service provider. And only then will we begin to see renewed growth in that area of the market. The final strategy that I'll present to you is around geographies. Here you see a bubble chart that looks very similar to the one I presented to you earlier. The first one I showed you was for security revenue overall. But now what you're looking at is security revenue just in EMEA. I pulled up the EMEA region for you as an example. We also have this for Americas and APAC. This is a much happier chart, though. Vendors' bubbles are higher up. They're growing faster, especially in the growth area. Vendors are growing better, and we only have a couple of vendors who aren't seeing better growth in EMEA. And if you look at these green boxes, that kind of aggregates it for you. In our benchmark, we found that security vendors grew their enterprise security revenue in EMEA at 30.4% year to year, and Americas a little less, and APAC less than that. And I'm sure you know the reasons for this, why EMEA is growing faster. Certainly the tighter and more stringent data protection concerns in Europe cause vendors to, cause customers to need to purchase more security solutions. And also the various country-specific privacy laws, such as the ones in Germany, require customers to spend a bit more on their security solutions. Additionally, we do see that continued trend in Europe especially for customers to choose multiple vendors for security. Especially they'll choose one vendor for network security and another vendor for endpoint and server security solutions because they're trying to mitigate their risk. This is very different from the attitude we see in America, where there is more of a one throat to choke kind of mentality. And so for that reason, customers in EMEA have to spend a bit more on security, rather than leveraging volume of scale from a single vendor. So we see FireEye did especially well in their growth, as well as other vendors, in this quarter, because they made investments to ramp up their security operations centers, to increase their sales presence and marketing presence in EMEA. And this paid off in overall revenue growth for these vendors. That's the end of my planned discussions, but now we'll take the questions from the audience.
Great. We've had a couple questions come through, so if there's any questions that you'd like to pose right now would be the time to do that. The first question we have, Jane, is what are some examples of products that would fit into your prevention category and your detection and response category?
Yes, in our prevention category, we included products such as Cisco ASA appliances. We included RSA, Secure ID, HP Fortify, Trend Micro Office Scan. Those are some of the products that fell in the prevention slice. And in the detection response, of course, we put FireEye's NX series there and other HX and things like that. We put SourceFire AMP, now owned by Cisco. We put Trend Micro Deep Discovery, Palo Alto Wildfire, and products of that nature. And I do want to note, not just products, of course, we place security as a service offerings in the two slices. And so, for example, Dell SecureWorks AETD went into the detection and response category.
Great. We might be opening up a fire hydrant on you right now, but one of the folks wanted to know about Blue Coat strategies, how you see them as a vendor, and if they have a clear and concise strategy going forward.
Yes, we did not include Blue Coat in our first benchmark simply because we had to draw the line at a certain number of vendors in order to get the benchmark published in a timely manner. But we certainly do follow Blue Coat carefully here at TBR because we do consider them to be a very significant player, especially in the detection response market. Blue Coat has done a great job of establishing a brand for itself that we hear customers recognize Blue Coat's brand, and they are evaluating Blue Coat. And so we do see strong growth in the future for Blue Coat, especially in the detection response market.
Okay. The next question we have, when will we see faster security revenue growth in APAC?
Right, so APAC is not growing very fast now for enterprise revenue for organizations, vendors in APAC, and I don't think that's going to change anytime soon, though. First off, right now in APAC, customers in APAC simply are not being targeted for advanced threats as much as Americas or even EMEA. They're just not the target. And also just the structure of the internet in APAC gives them some level of protection. I mean, we look at China and what's referred to as the Great Firewall of China. It gives some level of protection to all the companies there. So they simply don't need to purchase as large of a security infrastructure as other regions. Finally, though, the laws in APAC often do not require customer organizations to disclose or notify if they have been breached. You know, here in America, the threat of having to notify, I think, is the biggest driver of security revenue. Customers really do not want to end up on the front page of the Wall Street Journal. They do not want to have to notify their clients and customers that there's been a problem. And so they invest heavily to protect that reputation. You don't see that requirement to report in APAC quite as frequently, and so they're not needing to protect their reputations. So they simply, the organization in APAC simply don't have to increase their security investments as much as other regions. This probably won't change in 2015.
So, hold on, we have another question. Next question came through is, how do you derive vendor revenue for your charts? Not all of the information is public, and even with public companies, there's not always disclosure of security-specific revenue broken out by the main company revenue.
Very true, and that's the value of our benchmark. We use a number of sources and a very stringent TBR methodology to take vendors' overall reported corporate revenue and to model out what portion of that was their security revenue, and then diving even deeper, breaking that, of course, across the vendor enterprise security segments. And so we do a variety of things here. We do, of course, vendor briefings and other forms of research. But remember, I did mention to you that we conduct our own primary customer studies, where we ask we ask customers, who are you using, what vendors, what products, and how much did you spend? And we spread that over 3 years. We use that to help us make sure that we have properly modeled each vendor's security revenue.
Okay. The next question we have, to what extent will cyber insurance continue to stagnate or impact the need to in-house or outsource security analysts?
Cyber insurance is a very big topic with customers right now. I hear a lot of end-user organizations talking about it and evaluating it, but they're not really signing up much yet. A lot of them get to the point of looking at breach-specific policies. They see the premiums, they see all the exceptions, and they end up backing away saying, well, we'll just hope that our general business policy covers us. So it's a point of concern, but it's not really a point of action with customer organizations at this time. However, for those customers that are looking at their cyber insurance and they're questioning, will we receive better coverage, or will we be considered safer and therefore qualify for lower premiums or better protection if we're in-house versus outsourced? And that really does vary. I have not seen insurance companies give preference to outsource versus in-house deployments. They really are simply evaluating customers' deployments based on a number of criteria, and it could be outsourced or in-house. So I don't see a great difference there I do think cyber insurance coverage overall is stagnating because customers just are looking for policies that are not going to have so many exclusions.
There's two. First.
Okay.
Yeah, that one.
Yeah.
So another question we just had come through. A lot of the big players like Symantec are hurting. How do you see the vendor landscape shifting by revenue in the next year or two?
It's true that not just Symantec, but some other vendors, including large vendors, really didn't grow their security revenue that well last year. It's surprising that they didn't grow that well, and there has been a problem. And I think that's because we're kind of at the cusp of the shift from startups to established players. And so what I mean by this is over the past couple of years, the growth really came from startup vendors, like FireEye and CyberArk, and maybe I might even put Checkpoint a little bit into that category. And they're the ones that we saw the great growth with in the past couple of years. And customers were spending their new dollars there. However, as customers begin now to see those advanced solutions roll out from their more established vendors, I believe we will see the dollars start to flow back to the larger vendors, the IBMs, RSAs, Dell, as well as Symantec and Intel McAfee.
Next question we have is, are organizations less likely to outsource security than they would other IT responsibilities? Why or why not?
Yes, I do see a greater wariness to outsource security compared to other IT tasks. In particular, I hear a concern that customers are worried that security service providers are particular targets for attack in and of themselves. In other words, they are worried that hackers are planning to hit security service providers because of the added challenge of doing that and the ability to show that they were able to bring down a security service provider. And also the knowledge that those security service providers often have insights into customer organizations that will help hackers get to those customer organizations, such as security log data, access data. And so, yes, there is that wariness for outsourced security services compared to other outsourcing. But as I said, I do think there is an opportunity for a security service provider or a vendor with security service provider partners to come up with a very innovative approach that will break through that wall of concern. Yes, I'll just wrap up.
All right, so it looks like at this time, unless someone can type really, really fast, there are no other questions in the queue right now. So I think we have a couple more slides that Jane wants to go through since this is a new product, so that everyone on the phone can understand what's included in the product and if there's any inquiries either to get access to the product or to brief us would be particularly helpful. I'm going to turn this back over to her.
Thanks. I'll just quickly step through some slides. This is a look at the taxonomy that I described to you. You see the prevention on the left and detection response on the right, and customer managed products on top and security as a service on the bottom. That just gives you our view of the market. And here are the products that we're delivering in our enterprise security service. The core deliverables are their benchmark reports, and you've just seen the highlights from the first one today. Those come out twice a year. And those are snapshots of the market as it stands today. And then we also will be producing our market forecast for the enterprise security market that will go out 5 years and will follow the same taxonomy. We'll also be producing our reports on our primary research that I've mentioned to you. And of course, we have analyst inquiry time for myself or the other 2 members of our security team. In addition, we've got a bunch of optional deliverables that our vendor clients are selecting. For example, we offer vendor-specific reports, and we get a lot of questions. For example, clients are very interested in our FireEye report, for example. And so vendor clients are able to choose certain vendors that they'd like us to deliver to them the vendor-specific reports. for security, as well as we have a selection of emerging vendors that we cover in a shorter form report for you. And then the ongoing insights are that what you're receiving today are webinars, and you're also already receiving our special reports that go out to everyone on our distribution list, whether you're a vendor, client, or not. Just a reminder of our contact information. Please do not hesitate to reach out to me. I'm happy to answer your questions directly.
Thanks, Jane, and thanks to everyone that joined us today. As you can see, we are sharing all of the social media contacts for the analysts that are working on the program, as well as all of the TBR social media contacts. So we encourage everyone to follow the analysts on Twitter as well as TBR. You can get the slides, as I mentioned, on SlideShare. This recording will be available by tomorrow on YouTube. So if you have colleagues that were not able to attend today, you'll be able to listen to the recording tomorrow. So look in your inboxes. A lot of times this goes into spam. Make sure you keep an eye on your inboxes if you'd like to get the recording or the slides. And if there's any problems, please reach out to me directly at allison.crawford@tbri.com or to Jane at the emails listed here. I'm going to leave the chat function open for another couple of minutes in case there's any last-minute either requests to brief Jane, other questions you'd like to set up, or individual inquiries, because we are offering that right now. On your way out of the webinar, there is a short survey, 3 questions: how valuable was the presentation, how good was the presenter, and if there's any open-ended feedback or comments you'd like to give us, so that we can improve our presentations quarter to quarter to make sure that we're giving you value in the time that you are spending with us on these webinars. That information would be very helpful. So with that, I'm going to shut down the webinar. I want to thank everyone for attending today, and we'll be doing this again next quarter or the quarter after.
We actually have other webinars planned this quarter.
Okay, so keep an eye open for other security webinars that will be coming out, and we look forward to helping you guys all with your security business process needs in 2015. Thanks again, everyone. Have a great afternoon.